What's up, you guys? It's Matt here. So I wanted to take you through how to read a chart. I think that this is completely interesting, how to read a chart. If you don't understand how to read a stock chart, then you need to understand it, because whether you're investing long-term, a 401k, a Roth IRA, or you're doing short-term, more day trading, swing trading, you need to understand how a chart actually works. So I'm going to go through the basics of a chart using Active Trader Pro. I feel like that's the best software to use because you do have the extended software. It's not just what's on the online platform. So it's an amazing tool to use, and I always recommend it to anybody. If you do have Fidelity, download it. But I wanted to take you through a chart. So before I get started, please hit the like button, hit the subscribe button, and hit the notification bell for more videos like this one. Also, make sure you check out some of the links down below. Get your free stocks with Webull. Also, check out some of the credit card links as well. But the reason why I wanted to really go through this is just because if you are investing or you're interested in investing, I noticed that a bunch of people get confused with something that I said. You know, if I say it gaps up, or I say, look at this candlestick, look at this consolidation method. If I say something like that, a lot of people end up getting confused and they're saying, you know what, I got lost once you started talking about the chart. And I hope that I can open your eyes to understanding what a chart is all about and what I see here. Now, there's a lot more that goes into it. I'm just trying to make it as simple as possible for you to understand. Now, first, I wanted to start with the look of the chart. I wanted to start with candlesticks. People don't understand what candlesticks are. You can probably guess as you start to look at the chart, but if you look at each individual candlestick, whether it's red or green, you're going to see why it's called a candlestick. Now, it does come in red or green, which means that it's either negative or positive. It went down or it went up. And that's as simple as you can get it. And you can see how that's going to go up. Now, some people don't understand what's going on with the actual candlestick. What does that all mean? Now, what it actually means is they have two sections. They have the body and then you have the stems. Now, the body is where the price starts and where it finishes. Whether it's red or it's green, that's where you'll understand what's the high and what's the low of the starting price and the finishing price. So if you see a candlestick with a large green body, the bottom portion of that body would be where it started. The top portion of that body would be where it ended. Then if you see something that's red, then you're going to see the top portion of that body is where it started and the bottom portion of that body is where it ended. That's as simple as you can make it, whether it has a big body or a large, or that's as simple as you can make it. Whether it has a big body or a small body, that's what you're getting from it. Now, there are different types of bodies that you can see. You can see a large gap in the body, which means it had either a huge increase or a huge decrease, or you can see something that's just a small little body, which means that's more of a consolidation point. So those are the things you need to worry about when it comes to bodies, when it comes to the body of the candlestick. Next would be the stem. Now, the stem is basically either at its highest point or its lowest point. It didn't start there or finish there, but it got there at one point. So if we take a look and we started at this green point, we're going to see that it started at this line here, moved down a little bit, but then came back up, then started to really increase, and this is where it ended up finishing, but it ended up going a little bit higher and it finished a little bit lower. So hopefully that made sense, because I feel like sometimes I explain things that sound simple to me, but it's confusing to everybody else. So that's basically what that means. The stem is at its highest point or at its lowest point. And it's basically giving you that high to low, the full range of that minute or whatever the frequency is. It could be 1 minute, 5 minutes. You could have it at an hour. And you can go from there. So that's understanding candlesticks. You have a variety of different types of candlesticks, and if you learn what those types are, then you can be successful trading. Now, it may sound complicated from the start, but trust me, it's not that complicated. I like to explain it to people in a simple way, and then as they start to get comfortable with reading a chart, they notice, hey, you know what, this is really easy, and they start making some money from it. Next, let's go into some indicators, because I talk about this as well and people get confused with this. So I have a couple of indicators that I look at, which would be a VMA or would be a simple moving average. Volume moving averages are used in charts in technical analysis to smooth and describe a volume trend by filtering short-term spikes and gaps. You would see that as this teal line that's right here. If you would put that on your chart, you would get the same thing, which you can, if you're using Active Trader Pro, you can go up to indicators and just select the VMA, wherever it actually is. Somewhere here. It's probably going to be in the V's. So you'll see a volume adjusted moving average, or you'll see volume weighted moving average. Now with simple moving average, that's the average price over the specific period of time. This is this little red line. I also have a 50 moving average as well. So you would see these two, and what I typically use those for is middle ground. That's what they're all about. Indicators are middle ground to say, are they going to come back to a simple moving average? That's where you can make it as simple as possible, saying that you have an average. Just think of it as a trend line. You have a trend line, and a lot of times it flows on that trend line, right? And you see the dips, you see the valleys, you see the peaks. And when you have those, you know that it's going to bounce back in some form or fashion. Now, the reason why I wanted to go with this chart is because of the fact that it defies the laws, basically. There's always going to be that one stock that as it starts to move up a lot, it will defy the laws, right? So it jumps up a large bit, and then it doesn't come back to earth. It continues to grow, which means that you just have a bunch of people buying, and the buyers are winning over the sellers. And I understand what that is. Now, if you lose small, but if you win bigger. So that's why I wanted to show this, is because you can have losing situations, but then still profit out of the deal. So those are the main things that you need to worry about when it comes to stocks. It comes to understanding a chart. This is what I look at first, and then you can start to get comfortable with other things that you look at. Build your own strategy, build your own indicators, because there are a ton of indicators you can have in here. Something that makes you feel like you can become profitable. Don't just follow my method, but I'm just helping you understand just a couple portions of it. Now, just for shits and giggles, I do want to go into some other pieces here because I did talk about it and some people got confused. Any patterns that you see, make sure you look up stock patterns. They have a ton of stock patterns here, sort of like Head and Shoulders. That would be a stock pattern as well. Make sure you look up that, and you'll be able to get some information on how to progress after you do see that stock pattern. Also, gap ups, gap downs. A lot of times you'll see those in the morning. You can see those throughout the day, but you'll see a large gap in between stocks. You'll see one point to where it ended at, let's say, $5, but it'll gap up to $10, and that'll be the starting point for the next minute. And that's what you really want to see, because if you see those gaps, then you know that it's pulling away from that simple moving average to where it may fall back to earth. You just need to look for certain key things in certain candlesticks. So these are things that you want to get comfortable with. If you get comfortable with it, you'll become a successful trader, whether it's day trading, swing trading, even long-term investing. This is something that you would mainly want to use for the short term, but long-term, you can use some of these things too. They have a lot of indicators for long-term investing on where it's going to be. So things like that. But that's what I wanted to talk to you about. This is using Active Trader Pro. This is giving you the information that you need here, and hopefully it can help you become successful as a trader. Let me know if you enjoy this video, if it was helpful. That's what I'm looking for, is to help you guys. If you didn't get any help from it and I can break it down a little bit more, and you need some more definitions of certain indicators or certain things, then let me know. I can continue to break things down, whether it's in my story or whether it's on my other social media platforms, TikTok, anything. Let me know, and I can make sure I make that and make it more simple. But that's my video, guys. Make sure you hit that like button, hit the subscribe button, and hit the notification bell for more videos just like this one. Also, make sure you get your free stocks with Webull down below, and check out some of the credit card links. But I'm going to get out of here, and I'll catch you guys in the next video.